Episode 2 in person. We're going to talk about our investments. Primarily because I think like every time we post about money on Asian Wonder Woman, people are like super interested in this. Actually, like, why don't we start with like you made this super interesting post on the Asian Wonder Woman Facebook group about how much money do you need to like quit? Do you want to talk about it? Like, what made you post it?
Yeah, I think money is such a subjective thing, right? Like people treat it very differently and there's a lot of like emotion involved in it. So I think for me, I was like, I'm just curious to know what everyone's like threshold was to have before you quit your job. And so I posted the question around like, how much would it take for you to like quit your job and travel? So my answer was that I wanted $10,000 saved specifically for my travel fund, right? Not including like my retirement, my like cash, whatever investments. I just wanted $10,000 as a lump sum to like spend money on like food, traveling, whatever. And the answers varied. So I think, again, it's just like everyone's preference on like the amount of money and like the amount of like risk tolerance was like vastly different. Yeah.
Actually, like $10,000 was what I set for myself as well when I first started. It was like, I thought that was enough because when I was backpacking, I met someone who said they were traveling off of $10,000 for a whole year. And I think it's totally doable in like Thailand, etc. But I went to New Zealand and bought like a camper van and then like decided to do wine tastings. Anyway, I was out of the $10,000 in like 3 months. Like, and I was like, oh shit, to go figure out how to live now. But I think that's like actually a good leeway into our topic today because a lot of it is actually like what you do with the rest of your money if you're not actively working, and therefore like how can you make money work for you. And so we're here to talk about our investment portfolios. We both made an Excel or like you just noted them. I noted them on Google Sheets. You noted them on your notes app. Okay, that's cool. We decided that my investments are more alternative, so you can go first.
So I will say I'm more of the typical standard investor, I would say, compared to Ivy. Ivy has like a definitely more interesting investments. But I think for me, like obviously there's like the 401k, the standard American retirement account, which I've had since my first job at booking.com.
Wait, I have a question about this because I just recently invested in Ocho Wealth. Have you heard of them?
Oh, I have. Isn't it started by the guy from Teachable?
Yeah. So I invested in them angel-wise, and they're specifically helping like freelancers start their 401ks and like do investments, and they have a lot of lessons in this space. So my question is, did you stop investing in your 401k after you quit your jobs in the US?
So your 401k is only if you have like an employer, like an actual employer. As a freelancer or like you're an entrepreneur, you can have a SEP IRA, which is like separate that you can put money into. And then you could have, again, what you mentioned, the like entrepreneur, yes, SEP IRA.
You can't have a 401k if you don't have an.
You can have the one. You can have the one that you mentioned. Yeah. So it's different.
Ones.
Yeah. So the 401k that I'm referring to is like the one that was given. That was like through my employers. But the one that you're talking about with Ocho Wealth, that's a separate like entrepreneur 401k.
Yeah, there's an entrepreneur 401k. And for those of you that aren't in the US, 401k is like your retirement account where you pay taxes on it first, and then no, you don't pay taxes on it.
And there's two separate kinds. Right. Yeah. So there's like a traditional one where it's like you put money into it and then you pay taxes like when you retire, like, and you take the money out. And then there's like the IRA, which is you pay taxes up front. And then when you withdraw your money, you don't get taxed at all. So I put most of my money in like the one where like you don't pay taxes when you withdraw.
Okay. So you pay taxes now. So the the IRA. Yes. Okay.
So I have that.
Wait, why?
Because I think, in my opinion, I'll be making I think I'll be making shit ton, like a lot more money when I'm like 65. Like hopefully
manifesting
this shit. That's the whole thing. Yeah, and I don't like having money taken away like when I'm going to retire. So I might as well just do it now. You know.
Okay.
So I have the 401k, cash on hand, obviously, in a high yield saving account. I'm at 3.75 right now with Ally. Yeah.
Yo. Let me refer you to Wealthfront.
Oh, I know it's like 4 point something.
It's like 4.5%.
So annoying because they keep changing. So I had Wealthfront before, but then they dropped during like the recession, and then I pulled all my money out and then I moved it to Ally.
4.5%. And if I refer you, we both get 4.8%.
5 is really good.
For 6 months. 4.8% for 6 months.
Good. Okay, refer me. Damn it. They need to stop changing the rates. Actually, like Apple.
I'll refer any of you guys listening to. We can share. Once you get it, you'll
link it. Just link it in the podcast.
Maybe, I don't know.
Link it in the
Yeah,
YouTube,
yeah,
whatever.
yeah.
It's fine.
Those get 4.8% for 6 months.
But Apple created a card or something, a banking account with Goldman Sachs, and that's at 4.15. So it's lower, but still pretty good. Yeah. Anyways, Allie, what the fuck? Okay. And then yes, and then I have like stock options, which is like basically I put money into like, you know, S&P 500, whatever, and that's mostly through like Robinhood and Fidelity.
That's not stock options.
Or like, sorry, stocks.
Okay.
Sorry, I'm like reading the wrong line. But yeah, that's where I invest mostly in like companies that I believe in, preferably like I think I don't know if you know, but I like used to work in like the GPU space. So I'm like
What's GPU?
graphic processing units. So it's like the chips that
Developer.
yeah, it's like the chips that people use for like high computing, like let's say gamers. All they're like little chips. So I'm like a big proponent. I like believing in like AMD and like Nvidia. So I invested a lot of them way back when. And then lastly, Fundrise. Fundrise, it's like you basically invest in REITs. So for context, like I don't own property, and I honestly am not sure if I ever will. Like I don't think I ever want to own my own like place, because I just want the flexibility of like moving around. But right now, like REITs, they're basically like these like real estate like companies.
Yeah, they're like like there's a property and they broke it down to shares.
Yes.
Yeah. So it's like stocks before like it could be a portfolio of real estate.
Yeah, and these real estates can be like commercial, like actual homes, or like restaurants, whatever. So yeah, that's honestly like my portfolio. I feel like I'm the kind of person who just like keeps things a little bit more simple, and I will invest only until like I fully understand it. Yeah.
I mean, that's actually already a lot of different things. So I actually took I had a financial coach for a little bit it's a friend who was testing out, like he was trying to get into the coaching. But I think something interesting that I learned there is that every year for the last 100 years, every single year, a different asset actually performs best. So whether that be like cash sometimes, right? It could be real estate, like REITs. It can be like bonds. It can be stock. Whatever. So you want like to diversify like your entire portfolio. And there's like safety stuff. So what percent of stuff do you have in each?
Okay, so breaking it down. So I would say 60% of my money is in the 401k right now.
60% of your, right, like total wealth in 401k.
Yes.
I already forgot the answer. Like, so you've only been, you were only contributing when you were in the US, when you had a US employer.
Yes.
For the first 3 years. So you really maxed that out then in the years that you were.
I was super, super aggressive when I was younger. I was literally maxing it out all the time. Like I think the average American contribution was like maybe like 10 to 20%. I was trying to like put all of my like, yeah, basically
it's about 30 something thousand dollars a year, right? That's the max in the US. I don't know. I didn't max it out when I was younger.
I don't want to like quote the wrong number, but I like in my head I thought it was like 19,000. Okay. Let's just fact check this, but I think in my head it was around that time. And then I have 20% cash on hand, which I need to put in a higher yield savings account.
Wait, does that include the high yield savings, or this is just your check?
Just the high yield. So my high yield saving account operates as like I will move money to my like my checkings account. Oh. Yeah. So my checking account actually is always at like 500. Yeah.
Wow.
Yeah. So and then
I guess you use a credit card.
Yes, exactly. I don't. So yeah.
Interesting.
So
I don't do that.
All of my payments are done through credit cards. I don't really have like a lot of cash in my checkings at all because a lot of it is in my high yields.
So you should look at the fees of like moving things in and out. Right. I know Allie's free. I think Wealth Fund's free, but that would be really important. Okay, that's an interesting point. Because
I am really loyal to certain like credit cards, and I'm always like I'm just accumulating points all the time. So that's like how I operate, and like I have a credit score of 805, so I'm chilling.
Okay, good, cool.
Okay, and then my stock options, 15%, I would say, is allocated to that. I actually don't really.
Stop calling it stock options.
No, because I think I wrote it underneath. Yeah, so stocks. Sorry. Yeah, it's mostly in Fidelity and in Robinhood at the moment. And I buy a little bit every month.
How many? Oh, you do? You buy individual stocks every month. Are you loyal to certain companies, or like how many companies have you bought stocks?
Ooh, okay, I would say maybe like this is not investing advice.
Yeah, it's nothing that we're saying here. This is just our experience.
So
Yeah.
I would say I'll list my favorite 5 right now, which is like AMD, Nvidia, Google, obviously, Apple, and then what's up?
Too big to fail.
Oh yeah. And then shit, there was like one more that I was kind of digging into, but okay, let's just name those 4 for now. But then I also heavily invest in like ETFs. So that includes like VTI and VWO, which is like the Vanguard ETFs. Yeah. So yes, and then the Fundrise 5%.
Okay.
Yeah, because I'm not really sure like how I feel about Fundrise. Like I only have like a 6% return right now with Fundrise, and I heard that it's really hard to get money out. Yeah.
Why?
Like
Is it hard?
So like if I'm like
Fundrise is a platform to buy REITs.
Yeah, and so I put money into it, but the issue is like you cannot withdraw your money like right now. Like if I'm like, oh, I want to withdraw it right now, you can't do that. You need to wait for like I think like a quarterly like cadence. Okay. Yeah.
You don't have any money in robo investing?
No, I do it all myself. Okay. I used to have robo advising in Wealthfront, but I took it all out and I like redistributed.
Why?
Because I like managing my own money. I'm actually pretty okay at it. So like my 401k
you manage your own 401k too, like what an investment.
So I used to have a 26% return, but now it's only 19 because
but the market is not. Yeah,
I think I'm pretty like happy with my So I don't do robo advising. I just pick my own now.
Okay. Yeah. And how often do you look at your portfolio?
I don't tell anyone this. So this is kind of like nervous. Like I'm like nervous telling people because I'm also
I mean, no judgment. We all do it differently. Yeah. But how often do you have to look at your portfolio then?
I would say I definitely look at it like once per like week or like consistently. Like I'm actually checking my net worth on Personal Capital like every other day, just like out of curiosity. Yeah.
Wow. I didn't know that we were so different.
Really?
I thought we were more okay. My turn?
Yeah, your turn. Again, this is not financial advice, and I am not a certified financial advisor. Yeah, and everyone does it differently too.
Yeah, no, everyone does it differently. So you're about to hear. So let's start with the safest stuff, right? Like the stuff that we both have. So I have a lot of cash on hand. Too much, in my opinion. I should move more into high yield, but I have, look at my chart. 7% of my wealth right now is sitting in cash, and it's a lot more than $500.
Wait, can I ask why though? Or like
yes. So it's more like international accounts. So because I'm moving to Portugal, which I think we can talk about in a completely different episode, is I needed to move 12 times the minimum wage. 12? No. Just 1 year of minimum wage. I think it was like something like almost 20,000 euros and put into a Portuguese bank account.
Okay, that's justified.
That's like reasonable. So that's just sitting there right now, and I'm paying for like private healthcare insurance in Portugal out of that. There's like a management fee, whatever. Like it's just sitting in euros because I know I'm gonna have to spend that.
Wait, really fast. Are these your own accounts or is it joint with Owen?
No, this is my own account. Yeah,
just to preface, because she's married.
Yes. This is my own. This is my own account. And then I'm also. This is okay. Interesting you brought that up. So I own an apartment in Canada, in Toronto, but it's technically not mine. It's actually the names on it are my mom and Owen, but it's really mine because I paid for, because I have a Canadian account and I was actually making money in my business in CAD for the first year, and Owen has like literally never made CAD pretty much. And so this part was basically like I paid for using my CAD account, half of the down payment, and then half of the mortgage comes out of me and my mom's joint account. But it's really my account.
You should put your name on it.
Well, the reason like why it's like that is because my mom's name's on it. So like the insurance is like on both sides for me. So it's like not a big deal. And right now, like it's mostly me paying the mortgage. Or like we have someone renting it. So it's like the renter covers like 95% and we're still putting some stuff in because we got her in the pandemic.
That's a really good deal.
Pandemic pricing. So, but what that means is like I don't want to transfer money into Canadian dollars all the time. So I also have a lot of money there, just like and that usually comes from like when a friend needs USD and I need CAD, and it's like we just do the market rate without the fees, and so like that just kind of accumulates, and like I just have that kind of just sitting there as like over the years. Like honestly, I should do something with that money. Same with like the amount in euros, but it's like about the same. It's like under 20K. I think it's like because every month money comes out of it, but that's why there's a lot of cash. And then in US dollars, why there's a lot of cash is more like living. I don't know. I've never got into the habit where like I do spend everything on my credit card, but I always keep money in checking, mainly because maybe I'm afraid that I can't move it out of my high yield savings fast enough. I don't know. I just never did that.
That's a good point though, because like Allie, it takes one day, basically.
I mean, you can prep for that one day, but it is also, I don't know. I guess I should probably start doing that more because I can probably make quite a bit of interest on the high yield. Okay, so that's 7% just literally in cash, not even high yield. And then I have most of my money sitting in high yield, which is, so everything that I'm saying here is my money. I also have some joint stuff with my husband, but I have 40.6%, probably around, just say 40% in high yield savings.
Which is good. The rate is really good right now.
The rate is really good, right? 4.5%. So like, yeah, I'm just, that I consider as a hold for more investments I'll make one day.
That's good. That's good.
Okay. Then I don't have any REITs, so I've never heard of Fundrise. I have 7% of my investment. So this is just like money in, by the way. So now we're talking about like how much money I've invested and not what this asset is worth, because like I actually have no idea. Because unlike you, I don't do my own like investments. Actually, I might have added no, I have Robo in here. I have 7% in Robo and S&P, and that's completely like I deposit money every single week, and then I never look at it,
which is good. That's the
I
best.
do the opposite of you. So like I don't, and same with my other investments, unless like angel investments that I invest in need help. I literally like I don't.
You don't talk. Wait, do you still have a financial advisor there? Like your friend? Does he still help out?
No. That it wasn't a financial advisor. It was just like he did 4 coaching lessons.
Oh, okay, gotcha.
Yeah. So I have 7% in Robo and S&P where I don't even look, but that's actually like I deposit more into high yield savings than in Robo. That's kind of mixed with Owen's money because I'm not a US tax resident, and I actually am like high yield savings, even though it's all my cash, but like Robo's both of ours, it's all under his name actually. In his US accounts because it's just better rates.
Yeah,
like Wealthfront.
Agreed.
I'll probably try to figure out like it later when I'm in Europe, how to like move more money under my own accounts. 7% in international real estate. I invested into a Kyoto hotel. It was from a friend who has done other deals, and it's through a fund that literally just raises in order to buy what's it called? Like hotels that aren't doing well. What's it called? When you buy things
like fixer. Okay, it's like fixer uppers.
Almost foreclosed hotels. And then yeah, so we're part of the fund.
When can we stay there?
You actually get a discount if you stay there, but I think almost anyone gets a discount if they just book online. I'll share it, but yeah, I've never been. Yeah, and then 23% is that Toronto condo, which I have also never seen. So you can see I'm like super hands off with my investments. It's just from like my mom has a real estate agent in Toronto. Like she also bought an investment condo without me and Owen, and then she encouraged me and Owen to my husband to buy a condo, and then therefore we ended up in that situation. 401k is 10%, but that's actually primarily my husband's 401k. I have very little 401k because I did not max it out. I should have. Like if I was 23, I would try to max it out.
Yeah, for the younger kids, like do it honestly.
Because like it's just in there for 50 years, and the stock market will definitely grow in the next 50 years, you know? So that is actually primarily Owen's. And then I have 0.7% still in crypto. And that is also not like I did my own investments. I probably lost everything that I invested myself. And then so I like have, you know, some money where a friend who like actively manages an account, and then he has like a take rate, etc. So I don't actually know how much that's worth. It's just 10% of like total wealth equivalent right now was invested in his account.
Can we talk about NFTs really fast? Okay. How much money did you put into NFTs?
A couple thousand.
I think I did like 7,000.
You did 7,000? I probably did like
something
like that. Under 10 for sure. 5 maybe.
It hurts. I'm not gonna lie, but I think
Yeah.
of it as like giving back to like the artist. But okay,
Yeah,
anyways, I just
yeah.
wanted to like okay.
Yeah. Yes.
Okay, so back to crypto.
Yeah, I'm not bullish on the NFT market as it is currently. Actually, like compared to Web3, AI right now is so much more exciting. Like it's really world changing. Like we thought Web3 would be super world changing and like people just didn't pick it up. But like my friends' parents who aren't even white collar are using ChatGPT right now.
Good for them.
So let's do that in a next episode.
Yeah.
And then real stock options like equity is 3.9%. And that's primarily Owens too. I'm missing like a sliver.
Oh, I forgot to mention my stock options because I have some with like the startup I was at.
Right. Exactly. Yeah. Probably not super significant though, right?
Not that
like
significant.
Small percent.
Yeah.
Oh yeah. The small sliver on my graph that doesn't even have like a label is my individual stocks. So I don't invest in any individual stocks. I used to put money in like Amazon, whatever I made some money, etc. But I just decided that I cannot.
You don't want to pick and choose, yeah.
Yeah. I'm like more generalist. Like Wealthfront's robo investing does REITs as well. So I set it to max risk because I'm still young. And then I think individual stock picking is like what makes me think that I can beat the market and people who are looking at it every day and I don't want to look at it every day. So that's my reasoning.
Do you think your investing strategy will change as you get older? Or like what do you foresee? Like how do you foresee it changing?
I think there's like a lot of factors, right? It's already changed over the last few years as I make more money. And I think it depends on a lot of things. Like I'm keeping so much money right now in high yield savings and cash, like emergency funds and etc. so I can maintain my lifestyle. And I think that might stay. How I look at angel investment. Did I even talk about angel investments?
You briefly touched upon it, but you should talk more about it.
Okay, so I am. Was it not even? Was that the sliver?
Wait, are you currently in a syndicate?
Shit, I didn't even put it in there.
Are you currently in a syndicate right now?
I am. Yes, or I was. It's no longer investing. So, okay, sorry. My percentages are completely wrong because I did not add all my angel investments. But my angel investments are probably around the same as like my real estate ish. My international, like 7 to 10%, I want to say. Okay, so like where these ideas come from is just I think like I mostly invest in things that I follow already or my friends. I just put 10K into a kid at beta camp who went through beta camp the first year. He's like 17. He's raising his second company. His first company raised 1.6 million, and he decided he didn't want to work on dog camps anymore, and he wanted to like do urban planning software. So I thought that was really interesting. So part of that is actually like more like relationship building over time. Like I want to keep putting in checks because like I think he will hit it big eventually. Maybe not like at 17 on his like second startup, but some things are more relationship building. I invested in Copy AI, who's a friend, and they were like super ahead on the ChatGPT front. Now I don't really know how they're doing because of OpenAI, but and then some things like people that we meet at conferences that we're like interested in and can provide expertise on. This I kind of always collaborate with my husband on because he's a software engineer and we have different skill sets and like we see it as like a package deal. The syndicate that I'm part of was a 250K fund, 25 people put in 10K each, and we invested in 25 companies at 10K together. Just kind of diversifies. I just knew the person who was doing it. And then actually the biggest investment, I'll just say how large these are since we don't even know what the percentages are at any point. But this year I just put in 75K into what you can consider is like a syndicate, but not really. Like the whole fund invests in ESO fund. ESO, it's a secondary market fund where kind of you can consider it that way, but it's really like they have a fund that helps employees that execute on their stock options. Because when you're tied to a company, you usually like you're golden handcuffed, right? Because if you sell, you pay taxes. Like it depends on the type of option that you have, but like for a majority of companies, like late stage startups, is that you can be like quite rich on paper, but until the company IPOs, you don't actually have the real money. But if you decide to like, so you want to cash out right away, like you need to pay taxes. Sometimes you just don't have enough money to pay those taxes. And you can only, especially if you want to leave the company, because your stock options are only available for you to buy within like 90 days of you leaving. And if the company is not going to IPO or like sell in 90 days, you just lose all of it. But anyway, this is like a very complex like Silicon Valley thing. But right now is like a good time because there's a ton of people that just got laid off and they probably want to execute their stock options. That's like one big opportunity. And also like down markets are really good because you're buying undervalued, right? Stock options. You get to buy it at the employee rate of when they join it at. So like, let's say like, Lyft just had a huge 1,200 layoff. Like I think Meta had another layoff this week. So like, let's say that like at the time you joined Lyft, it was still a private company and like the option was worth like $1, but you're like, you could always execute at 30 cents. And then the Lyft, stock grew, but then that person still can always execute at like 30 cents. So like we're buying it at like cheaper at the employee rate or like slightly more, whatever. And like, we help them execute. ESO fund. And I didn't even invest in I invested in a fund that hadn't put enough money together to even be allowed to be part of the big fund.
Oh, wait. So basically, okay, so just for context, you are part of the ESO fund that is buying from other employees.
Sorry, no, I invested in a
software,
a syndicate, right? Like someone pooled money together because ESO fund doesn't take one-off investors that only put in like 75K even. They take like million something. So I don't actually know how big the fund that I invested in is, but that fund then takes a percent, like invests in ESO fund, 100% of it, and then that then helps employees buy, like they provide the amount, and in exchange they get some of like a percentage of their stock. Yeah, so it's a win-win situation for like both the employee who wants to like cash out on the stock, and then also ESO fund gets a percentage. And then when ESO fund sells the stock, when the market is higher, we get paid out for the percentage that we own.
Yeah. Okay. That's very interesting because like, I understand because like right now I have Stripe options and there are people actually asking me right now. They're like, do you want to sell?
Stripe isn't public yet. Exactly.
And I'm like, no.
So you have good options because you didn't have to execute on them, or do you own them already, or are they still
them right now?
Yeah. So you had enough purchasing ability to purchase them and then pay taxes on like the existing gains. So, but some people don't, right? Depending on how much they own, like how long they had to wait before executing, because some companies grew really fast. From the time they joined to a year cliff when they actually are allowed to execute, all of a sudden like the stock's worth a lot, and then you still have to pay the difference. Yeah.
Very interesting. Okay.
Yeah, so there's actually a lot of like alternative investments.
Yeah. Very cool. Yeah, I think I don't know. Like I don't really know what my investment strategy is, honestly. I think one thing I've realized just in general with money though is like I like to be in control. Right? So I'm always like
clearly.
Yeah. So like I always like being in control of like the strategy. Though I feel like in the future, like I would want someone to kind of just give me a gut check and like help me find like, oh, you could, pay less fees here. Or like, if you did this and help me like adjust my like aggressive strategy at the moment. But yeah, I don't know. Again, like my philosophy is like, I'm not going to invest in anything that I don't understand. And I feel like it takes me a lot to like trust something before I move forward. Yeah. But yeah.
I'm definitely a much more rash investor. I'm like, oh, this sounds like a good idea. Like even when I didn't have a lot of money too, right? Like I didn't really understand. I'm swayed by like people that I trust, which isn't good. Like that's something that I'm working on. And I feel like investment strategy wise, the advice that I've gotten is like, eventually you want to double down on something that you're good at. And like I heard this from the CEO of like a pretty successful like tech company who does angel investments. And that's how a lot of people in Silicon Valley got rich, right? Or you can go just do real estate, right? Because eventually if you go deep in something, your expertise grows in that area. And I haven't gotten there yet. I don't really have the time, but I feel like startups are definitely things that I understand more than real estate. And then also like if I can have expertise on like more global arbitrage stuff, I think that could be really good too. Like my euro, even though I totally didn't intend for this, but I bought it when it was like under one with a USD, and now it's higher. And then we're like, wow, I just made like 10% without like even thinking about it on like the 20 something K or 30K that I deposited in euros. Yeah,
I could actually see you being like an advisor to startups, and then you get like a percentage of like their shares. But
I just don't have time right now for that. But yes, like. I mean, I'm willing to help the companies I invest in because I'm genuinely interested, because if you invest in startups as an angel investor, they give you like monthly updates. And so I get to see the inside of many startups, and that actually helps me operate on my own as well. It's fascinating.
What advice would you give to people who are like interested in angel investing? But like, I guess like what should, like, how do you know that they're like ready? Yeah.
I mean, you should definitely see it as like almost like crypto. This is like, you're betting on something that like, even if you had as much information as possible, you still don't have enough information because like the market changes. You don't know about the founder. Like it's basically like you're backing a founder, right? And even as a founder, you're like, well, there's a huge chance that I won't succeed. So definitely like very little of your income. But I think the percentage of how much you invest in this changes as like your wealth is built. Okay. So I would say angels was always under like 5%. Now it's like, 10, 15, maybe. I think that will grow.
For returns?
No. I meant like percentage of my assets.
Okay.
The investments that I put in. But that's because I already built out my emergency fund and huge high yield savings like for that. But my advice is like, in order for you to get started, if you want to just dabble in it, there's like AngelList where you can invest. If some companies don't care that you're not a not certified. There's some kind of status which some companies care for that you have at least $1 million in assets or make over a certain amount. I want to say it was like 300,000 family income or 200,000 solo for the last 2 years.
Wait, are you certified right now?
It's not called certified. It's called
It's like I know like certified is the only term that I would know.
It's not certified. It's not you don't have to get a certificate. You just declare. And they don't check. Some do
Angel
check.
Declaration
No,
of Independence.
I literally don't. I don't remember what it's
but
called.
There's something.
Are you a?
Sorry, I'm like stretching.
I literally don't remember the term.
Okay,
it's just slipping my mind right now. I really should know. Sorry,
okay,
this makes me sound really unprofessional. But yeah. So some do check. Some most don't. You just have to be like make sure that the founder's okay with it if you're doing it separately. Some AngelList companies, and there's also some other like crowdfunding things, which is basically like an angel. Where I actually invested in Maven through one of these platforms because that's how they want to collect checks and they don't care that you're not whatever the equivalent certified is. But I do meet the qualifications or whatever now in case anyone ever wanted to check. But yeah, that would be my advice is that there's actually a lot of like similar to crowdfunding, but instead of you giving money and then you get like a swag thing or something, you get like an equity thing. And then you get investor updates, which is a great learning experience for anyone who wants to get into startups.
No, that's awesome. I know there's a bunch of like community groups too for like female angel investors. Like
yes, where you deal share. Yeah, Eve has one. I'm in a few.
There's a very famous one in Asia. You know her, or like she invests or something.
Pocket Sun has one. I forgot what her fund is.
But they all
called.
require membership. Like they all require you to like actually put in money to become part of this like club, and then you like learn and invest together.
Yeah, because it is true. Like at the beginning, you offer very little value. But like a lot of it's deal sharing because a lot of people have a problem where they want to invest and they can't find deals. I don't see that right now because it's already April and I didn't even plan on investing in that much, and I invested in like 4 different things already this year, and I wasn't even looking. It just kind of came. But then some years are really slow. Like last year, I don't think I invested in anything. So I'm not particularly looking yet because I don't have enough energy. But I know the people who want to be an angel investor, they only invest in like 10% of the deals that they talk to. So they have to talk to a lot of deals. And there's also actually for a young person who wants to get into this, there's a term called venture scout, which is actually like you work for a VC or an angel fund and you help them talk to startups.
Oh yeah.
And then you get a cut of that equity that like they put in or you make money. There's a lot of ways that you can structure this with the people but you just build your network of startups who need fundraising and people who have money, right? And then you source deals. You're that middleman. And then you either get paid from part of the investment. You help that startup raise. They pay you a part of like how much they raise. Or you can be like, I want to take like point whatever % of the total like equity that's me.
We actually met one at like the Draper Startup House event in Singapore. So like one girl, we had like an open mic night for like startup founders. One girl went up, she like pitched her startup, and then this girl came from like I think it was like the Hustle Fund or something. Yeah, and then she seemed quite young, but she was very interested and was like asking all these questions. And then I later found out that like they're basically having a conversation.
Yeah, they're gonna try to introduce venture investments. Yeah, and they're usually like
venture scout.
Yeah, it's called venture scout. Usually in their early 20s.
Yes, yeah. So I thought that was fascinating. I was like, oh, you're kind of like a poacher or like a yeah.
That's how you do it without your own money. Yeah.
Very interesting. Cool. Well, I feel like we learned a lot about investing strategy, and I think definitely our strategies are going to evolve over the year. I'm excited to see how your investments turn out.
Yeah, you too. Like, we should definitely talk about this in like 5 years
You
or something.
should. Yeah.
Not just like how it turns out, but like how things change over time.
Cool. Okay. All right,
guys.
Bye.
I'm the baddest chick. I'm not a thick. I'm about my business. Show a money clip.